So I would say the biggest mistakes that I see, not so much on the sole proprietor side, but maybe more on the incorporation side. I think that people think that they need to incorporate right away. Like if they're going to have a business, they need to incorporate. And sometimes that is true, but I would say most of the time it's not. So typically you would like to incorporate when you have significant legal exposure. But if you're not doing anything that's, super wild, where you're not gonna, have a lawsuit kind of hanging over your head, and you can have a good business insurance to mitigate that, you really don't want to kind of consider incorporating until there's a tax reason to do it. And for the most part, if you can deduct it as a sole proprietor, you can also deduct it in the corporation. There's not really any other benefits when it comes to expenses and income. It's just that there's a deferral opportunity in a corporation. So as a rule of thumb, you want to be making more money than you're spending after tax, right? In order to utilize that corporation properly so that you can get the deferral. But if you're taking everything out of the corporation at the end of the day in a wage, then it's just going to kind of cost you money in compliance and not be super beneficial.
Okay, good to know.